And what do you see the levers that need to be pulled to pull us out of this? How much of it is it tariffs settling out and interest rates? What needs to happen to pull us out of this?
Yeah, I mean, I think, as tough as the tariffs are on builders, and it's certainly, I think, creating this huge level of uncertainty, right? Which may, I think is going to make them be a little bit more conservative with their approach looking into next year, with construction activity. I think it's still a rate story in the end, because if you get mortgage rates coming down to 5.5%, 6%, that cures a lot of the tariff-led and, sort of input cost inflation that builders potentially face. And the thing is despite a lot of the, kind of the red flags, yellow and red flags out there in the construction market, builder margins, especially for public home builders, it's a different story for private builders, because they're subject more to the rate market as opposed to kind of the mortgage finance operations the public builders have, and the more levers they have to pull to clear the market. But at least for the public builders, most of their margins are still in relatively healthy territory. Now, there's a variance there. There's some that are struggling more than others, but generally speaking, they have managed their situations pretty well. They have pretty clean balance sheets. So I do think if we can get demand moving, that will allow them to kind of have a more stable situation and maybe be able to pass on a little bit more of those costs from tariffs, to the consumer. And, that gets bundled in a 30-year mortgage and amortized. So some of those costs don't look as bad on a monthly payment basis, right? So that to us is still the big thing that needs to change.